Great, wonderful. Good evening, everyone, and welcome to the penultimate meeting of the Finance Committee this calendar year. Tuesday, November 30th. This is a special meeting, and would the clerk please call the roll?
Yes, ma'am. Vice Mayor Burt.
Here.
Councilmember Filsa.
Here.
Chair Cormack.
I am here.
For the record, we have a full quorum.
Thanks so much. All right, we'll start with oral communications. This is a time for members of the public to address the Finance Committee on topics that are not on this evening's agenda. This evening's agenda contains the audit of our financial statements from 2021 and the annual comprehensive financial report for 2021 and referrals. So let's take a look and see if any of our participants would like to make any oral communications. Please raise your hand in Zoom. I don't see any hands raised. Would the clerk please confirm that?
That is confirmed. I don't see any request to speak.
All right, we'll close oral communications and move on to our first action item, which is a discussion recommendation to accept the audit of our financial statements for June 2021. Over to staff.
Good evening, Finance Committee. It's a pleasure to be before you this evening. This is Kyle O'Rourke, the City Auditor speaking. I'll work through a couple of introductory slides and then turn it over to MGO, the city's financial auditors, to go through the audit reports in their presentation this evening. As you may know, the city auditor has a responsibility to enable the city to hire a financial auditor. In this case is Macias, Shinnie, and O'Connell, MGO, and help coordinate that annual external financial audit activity. So we, the city auditor's office, work hand in hand with the administrative services department to help coordinate the annual financial audit. And those are the results that will be presented this evening. Just a very high level snapshot before we get into the weeds a little bit. The purpose of the financial audit is to obtain reasonable assurance that the financial statements are fairly stated. The results of the financial audit reports that will be presented tonight are positive. The auditors have concluded that the financial statements are prepared in all material respects and apply with applicable accounting standards. And as you may recall, there's one audit activity that remains open until the following calendar year, and this happens every year, and that's the single audit, and that will be completed by March. With that as being introductory comments, I'll turn it over to Ben Lau, director from MGO.
All right, good. Thanks, Kyle. So good evening, everybody. This is Benjamin Lau, Assurance Director from MGO, the city's independent external auditor. So I'm here to present the city's audit result for the year ended June 30th, 2021. Next slide, please. So this is a list of our scope of services that includes the EFR, cable TV, the Palo Alto Public Improvement Corporation, Regional Water Quality Control Plan, financial statements, GAN limit. What is not listed here is the report to the City Council. And then lastly is the single audit report, which is a compliance with federal awards. Next slide, please. So similar to what Kyle has mentioned, the purpose of the audit is to provide reasonable assurance that the amount and the information presented are fairly stated and free of material misstatements. And the applicable framework is listed here, the GAAP, GAS, and GAGS. So in summary, so I think that's the audit result. In summary, we have completed our audit of the city's effort and other financial statements and have issued unmodified opinions on the financial statements. And in other words, we have issued a clean opinion on the financial statements. So for the effort, the audit opinion can be found on page 1 of the effort or page 95 of the meeting packet. And with the unmodified opinion, we also include a paragraph of an emphasis of a meta paragraph discussing about the city's implementation of a new accounting standard this year, which is statement number 84 on fiduciary activities. Our opinion are not modified with respect to this implementation. And regarding the effort itself, the few significant disclosure for the city includes the pension plans, which is footnote 11, OPEB, which is footnote 12, and also footnote 16 on commitments and contingencies. And the other reports, as mentioned before, it is a modified opinions and no material weakness or significant deficiencies identified on those reports. And regarding the single audit, it's still pending audit guidance, and we are scheduled to complete actually the date. I put January 31st, which is hopefully a month, 2 months, exactly 2 months from today. Next slide, please. So the next report is actually the report to the City Council. And this year's report is very standard, no modification. And this includes our required communications to those charged with governance, which is the City Council and also the Finance Committee. We do not have any financial statement findings for this year. And the city's accounting estimate, accounting practice are deemed to be reasonable, and we do not have any disagreement with the management. And similar to prior year, one thing to highlight, similar to prior year, we have included one uncorrected misstatement in the report. It is related to the city's continuing to the cleanup process of the construction in progress capital asset balances. And the city continued to review the construction in progress balance in details and roll off balances that deemed to be not eligible for capitalization as they are maintenance related. And so since this, the city has cleaned it up, but since this amount are deemed to be immaterial, it does not meet the threshold, which is immaterial, the city elected not to restate the financial statement and in turn run through the differences in current year. And we as the auditor agreed with this accounting treatment. So please also note that for this adjustment, it only impacts the full accrual basis government-wide financial statements. And the city's current year write-off, those funds has already been expanded in prior years. And given that the government entity is not expected or actively selling its capital assets, the timing of the write-off during current year do not have any impact to the city's operation. So it's not a current year or prior year general fund issues. Those money has been spent. They're capitalized for the purpose of being depreciated to smoothen the impact of those capital asset costs. But in this specific case, the write-off is more like just to clean up the process, and it doesn't impact the city's current year or future year's operation. And also, as previously mentioned, the city current year implement GASB 84, which is fiduciary activities. And the implementation is smooth based on the quality of work performed by the city staff. And one highlight I want to bring to this committee is one future item for FY 2022. There's a new accounting standards that will be implemented, and that's GASB statement number 87 on leases. And we expect that to have a very significant impact to the city's financial statement. And we also expect that the city will need to utilize additional resources to effectively and properly implement this standard in the upcoming year. And regarding single audit, I already mentioned we will expect to issue during the first quarter of first calendar year 2022. So in summary, last paragraph. In summary, for the 2021 audit, the city received some federal fundings in response to COVID, but did not enter into any non-routine significant transactions. So considering the continued impact of COVID-19 and the 2021 audit is in fact considered auditor's term non-eventful and a smooth audit. So non-eventful is a good thing actually for auditor's perspective. So anyhow, as stated before, there's no finding internal control over financial reporting, and there's no material misstatements identified. And all credits goes to the city's finance team, including Rosalind, Christine, and lead by Kylie. And my opinion, the city's finance are in good hands, and with the support of this strong team, and also the established internal control environment that you have right now. So lastly, I would like to take this opportunity, thank the city staff and also the city auditor for all the continued support. And with that, that concludes my presentation. and I'm available for any questions you might have.
Thank you so much, Mr. O'Rourke and Mr. Lau. It's just delightful to have a non-eventful report. I have to say, we don't have those often, at least on Monday evenings. All right, well, with this, we will turn to our members of the public and see if anyone would like to make a public comment on the audit of our financial statements from 2021. If you would like to, please raise your hand in Zoom. Don't see any phone participants. We'll wait for a moment. And I don't see anyone requesting to address us. Could the city clerk please confirm that?
That is confirmed, Ms. Chair.
Thank you so much. All right. Then I will turn to my colleagues for questions, comments, and motions. Vice Mayor Burt, you
Okay.
unmuted first.
Okay. Well, first, thanks to everybody for a real solid performance in the way that the financial management is conducted. I wanted to ask just one follow-up question, Mr. Lau. You mentioned the new GASB rule on leasing. Can you or maybe Kylie explain, so what is the change and what do we expect to be the impact on us?
It can be a 2-hour presentation on this. So you
I'll
want a
take the
2-hour
shorter
version or 1-minute version?
1 to 2 minute sounds about
I'm
right.
just kidding. Let's do a 1-minute version. So I would talk about before and after. So before the implementation, the accounting term that is used to report any leases or lease-like activities are operating leases and capital leases. So for operating leases, you can consider as more like you enter into like you rent a place 5 years. So that has no balance sheet impact. For financial reporting purposes, you present the future lease payment, more like your mortgage schedule, and that's it. That's no balance sheet impact. And then the other type is called capital leases. A classic one will be you enter into an agreement to lease equipment for 5 years, and that asset will be on the books, and then with a corresponding long-term debt, which is called capital lease liability, and that will be paid off on amortized on a straight line basis. So that is the old accounting basis. So the new one, basically it is, there's only one thing, leases. So there's no separation. Anything that I mentioned that is similar to operating lease, there will be a financial statement balance sheet impact. And there are items like deferred inflow, deferred outflow, and the amortization of it. It's complicated, but the complication is not on the accounting side. It's not about the journal entries. That is easy. You can put it into Excel, and that can be done. The hardest part is actually identifying the completeness of the leases, which is getting a complete population of all the existing leases that you might have. So that's number one. And then number two is making sure that there are identify whether they are considered leases or they're not considered leases. And then there are also different clauses in an agreement that can trigger different treatment. For example, multiple component leases, or your lease is dependent on like a CPI increase. So how to treat those will be like significant and important. So in other words, this is not just finance that can complete this project, to successfully complete it. Instead, it is the finance can be the lead on that, but that involves other departments, something like public works, or even like, I don't know, that can be other departments. So that's the long story of that. And a short story of that, sorry. And other one thing to highlight is in the corporate world, non-government entities, this lease standard has already been implemented. The public companies all implemented. Private companies, I think it's this year implementing, they got delayed because of COVID, and actually government actually got delayed for 1 year. However, this is the year 2022. So with that, that's my 2-minute summary.
And just Vice Mayor Burt, to quickly indulge, as an organization that actually has a lot of leases. This is a bigger lift for Palo Alto than you may see in other neighboring jurisdictions. We have very unique relationships with a number of different things. I think everyone is aware of our real estate team. You know, we have leases with a lot of coverly tenants. And so you think of that volume, we do have some unique aspects that this will hit us in different ways. So it will be a citywide effort to pull all this information together, obviously led though by ASD.
So when you refer to things like coverly, you're not saying that, I mean, those were operating leases. So but you just have to pull all the leases together and then sort through which are the capital. Is that what you're saying?
Sort through which one, well, we have to pull all of them together. And then as Ben had alluded to, figure out from them how we report them now based on this new standard. So whether they're operating or capital leases, it doesn't matter. And so they, you know, sort through the terms. Obviously, most of the coverly leases have the same general terms. So it'll end up being either treat them this way or treat them that way kind of thing. But yes, it's the activity of actually pulling every single lease document that the city is currently engaged in.
So that's a pretty big kind of one-time project, and then a certain maintenance after that. Are you guys already in the middle of this? And do you have any sense of what kind of approximate dollars we might be looking at on just a balance sheet adjustment?
I wouldn't venture a guess on the balance sheet at this point. Where we're at this point from a staff perspective is working on pulling all the documents. So obviously our real estate team is heavily impacted by this, so they're aware of it and have been working on pulling and prepping for that. So we're in that kind of information gathering stage. And we did that while our accounting team was working on this Accrual reporting. And so hopefully as we embark on the new year, we will kind of switch gears and try and get further into making sure we not only have all the documents, but figure out how to report each of them.
Okay, thanks.
Mhm.
Councilmember Filsa?
Just wanted to make sure I understood that. Are you saying that it used to be that if we signed a 5-year operating lease, then we wouldn't recognize years 2 through 5 of the liability on a balance sheet?
That is correct.
Is that what
If
you
you're
said?
talking about as of right now is year 1, that's correct.
Yeah.
So it is a disclosure item
Yeah.
called future rent schedule.
Even though you've got a contract, even though it's a 5-year contract,
Mhm.
as opposed to a 1-year contract that you intend to renew next year.
That's correct.
I wouldn't have guessed that that you didn't have to recognize that. Stupid government tricks again, I guess. Okay, thanks.
Okay. It's really, I think, a testament to the high expectations that the city of Palo Alto has for how we operate, that we have such depth of information, and that it's been reviewed so carefully, and that you have an unmodified opinion, which to the outsider sounds really unexciting and uninteresting, but is a big deal. So maybe the accounting firms need to come up with a better way to describe like good news.
This is why in accounting we're such exciting people.
We are okay. I do want to take a moment to recognize the work that our ASD and finance and frankly the whole city does. Every year for me, this is an annual reminder of the complexity of our city, the number of different arrangements we have, and working through it. You know, it's reassuring, and even the the error that was caught last year is an indication of the level of detail and scrutiny that is applied to this, and is publicly available. So I don't see any reason to drag this out. I will go ahead and move the staff recommendation.
Second?
Thank you. Multiple seconds. Great. I don't need to speak to this further. Vice Mayor Burt, would you care to?
No, thanks.
All right. And Councilmember Filsa, do you have any further comments?
I vote yes.
And we're just getting there. Let's go ahead and vote. I will vote yes. Vice Mayor Burt,
Yes.
Councilmember Filsa, in order.
Yes.
Thank you. That passes on 3-0 and moves forward. And let me take an opportunity again to thank Mr. Lau and his team for assisting us with this. All right. Now we'll move on to item 2, which is a recommendation to approve the FY 2021 Annual Comprehensive Financial Report and associated budget amendments. Does staff have a brief presentation?
We do. Thank you, Chair Cormack, Kylie Jose, Administrative Services Director. We have both Ms. Christine Paras as well as Rosalind Fernando, our Assistant Director and Finance Manager, that'll walk through a brief presentation. Obviously, these are the documents that go along with the last item that you just approved, which are the audit opinions. So we'll do our best to not be too redundant and turn it over to the two of them. Thank you.
I'll take a moment to share my screen, just 1 minute. Can everyone see the screen?
We can.
Rosalind, you're up.
Good evening, Christine. Is it my turn?
Yes, you're up, Rosalind. Thank you very much.
Thank you, Christine. Good evening, Finance Committee. Tonight, we're here to present the result of the fiscal year 2021 ACFR and some budget year-end adjustments. As mentioned before, there are various financial statements included in our ACFR. We have the government-wide financial statements and the fund financial statements. Under the government-wide financial statements, there are 2 major groups. We have the governmental activities and we have the business type activities. Under the governmental activities, these are the city basic services, such as public safety, library, which are generally funded by taxes and or by specific program revenues such as fees and grants. While business type activities, these are the city's enterprise activities, which are funded in whole or in part by fees charged to external parties. While under the fund financial statements, we have also the governmental fund, which is similar to governmental activities. And we have also proprietary funds, which is similar to business type activities. All these financial statements, the basis of accounting is full accrual, except for the governmental funds, which is modified accrual. There's various differences between full accrual and modified accrual. One example would be the recording of the acquisition of the fixed assets. So under full accrual, when you acquire a fixed asset, this is recorded as part of your capital assets. However, under the modified accrual, this is recorded as expenditures. So that's one of the main difference between full accrual and modified accrual. Another thing for this year is when we issued the COP related to the construction of the public safety, under the full accrual, this is recorded as a long-term liability. However, under the modified accrual, this is recorded as other sources of revenue. That should be some overview of these financial statements. Let us focus first with the government-wide financial statements. For this year, the city's net position is 1.23 billion. There is an increase of 4.8 million or 0.4% from fiscal year 2020. And the source of the 4.8 million first is from the business type activity, wherein there's an increase of 22.2 million. While the governmental activities, there is a decrease of 17.4 million, wherein the net effect is 4.8 million. This is a statement of activities, as mentioned earlier, looking to the governmental activities for fiscal year 2021. We could see that the change in net position is 17.4 million, mainly due to the functional expenses higher than the revenues. Please note that this year under the functional expense, it includes 12.6 million in relation to the claims for the utility transfer litigation. And this is recorded as an expense this year under governmental activities being a full accrual, and there's a corresponding claims liability under long-term liabilities. Well, for the business type activities, an increase of 22.2 million. Looking to that column 2021, 22.2 million increase in business type activities. This is will be discussed further under the enterprise fund sections. Focusing closely to the government-wide statement net position 2021, we could see here that, as mentioned, there's a 1.23 billion, and out of that 1.23 billion, 91.2% is for the investment in capital. That should be the blue shaded area of the 2021 bar graph. And the restricted funds is 83.7 million. And there is unrestricted funds of 24.1 million for all the funds. That should conclude the government-wide. The next slide is for the fund financial statements, wherein we're using the modified accrual, as stated before. Overall, the city's fund ended the year with a positive fund balance. So the total combined governmental fund balance is 365.6 million. There is a significant increase, which is 98.9 million from fiscal year 2020. The source of the 98.9 million, first is 13.8 million from the general fund, but the big portion is really coming from the capital project fund, which is 82.1 million. The reason for that is due to the issuance of the COP for public safety building, which is about 101.5 million, are recorded as other sources of revenue. And another is 3 million from other governmental funds. Looking closely with the general fund, it ended with a 49.1 million budget stabilization reserve. It's an increase of 13.2 million or 36.8% from fiscal year 2020. The city's enterprise fund, except for the electric fund, ended the year in a positive change in net position. Looking closely to budget stabilization reserve, as mentioned in our ACFR, there is a 49.1 million BSR. This is 23.5% of the fiscal year 2020 adopted general fund budgeted expenses. However, there are various uses already recommended for this for fiscal year 2020. So the BSR will go down to 43.3 million. There's still a surplus of 4.6 million compared to the council 18.5% target. So the various uses are the drawdown in the fiscal year 2022 adopted budget of 1.8 million and the 4 million for the utility transfer litigation of 4 million. That will bring down to 43.3 million BSR. This slide is the history of the general fund, which we could see here that in fiscal year 19, there is a 132.8 million. This is before pandemic compared with the fiscal year 2021, which is lower. It's about 116.1 million. Comparing fiscal year 20 and 21, most of the taxes, major taxes decrease, except for the property tax and documentary transfer tax. Property tax increased due to the higher assessed value, and documentary transfer tax increase due to the various commercial transactions that happened during the year. This slide is showing the actual expense from fiscal year 15 to 2021. This is budgetary, meaning it includes the reappropriation and encumbrance. We could see here from fiscal year 15 to 2020, it continuously to increase. It's from 148 million to 195 million. However, comparing 2020 and 21, we could see a decrease from 195.6 to 179.7 million. This is mainly due to the various service reductions that were implemented in fiscal year 2021. However, comparing 2021 and 2022 budget, there's an increase of about 11 million. But please note that in that 11 million, there is an 8.4 million related to the litigation cost. So if we remove that, the 2022 budget is almost equal with the 2021 actuals. This is the capital project fund. As mentioned, there is an increase of 82.1 million. And due to the issuance of the COP for public safety building, the 165.7 million components, the major portion is restricted for public safety building, which is 90.9 million. And assigned for all other capital projects for the next 5 years is 64.3 million. This is the enterprise net position summary. As mentioned in the first slide, there is a total change in net position of 22.2 million. And comparing with fiscal year 2020, there is a decrease of 17.4 million. The main reason for the decrease is due to the electric fund. There is a decrease of 23.4 million. This year, it resulted to a negative 4.8 million change in net position. There are various factors. That's why it resulted to a negative. First one is the decrease in the commercial retail sales due to a lower consumption. And a second is also decrease in the investment earning due to the lower market value of the investment. And the third one is the higher purchase cost of the electricity due to the low hydroelectric supply this year. And this 23.4 million actually partially offset by the increase in the refuse fund of 5 million. So 5 million increase, as we recall last year, we did a reimbursement to Green Waste of Palo Alto of about 6 million for the vehicles, which this year is only about 1 million. So this resulted to a positive net position for fiscal year 2021. That should conclude the result of the fiscal year 2021 ACFR. So to continue, we would like to recommend is about the fiscal year 2021 year-end budget adjustments, which is in the attachment B. This is just to align the actuals with the budgets. There are major adjustments. First would be the net zero realignments in the general fund between departments, ensuring actuals remain within appropriated level at the department level. And the second one is the capital project adjusted for actual revenue and expenditures, maintains overall council approved the total project budgets. Recommended action, staff recommends the Finance Committee forward to the City Council for its approval the city's fiscal year 2021 ACFR, which is in attachment C, and amend the fiscal year 2021 budget appropriation ordinance, which is under the attachment B for operating budget exhibit 1 and capital budget attachment B exhibit 2. Thank you.
Thank you so much, Ms. Fernando. And that concludes the staff report. Excellent. All right, we'll see if any members of the public would care to address us on this topic. Raise your hand in Zoom. I see many of our attendees are actually staff. So anyone have a question? Raise your hand. Now is the time. All right, I don't see any. And would the clerk please confirm?
Yes, that is confirmed, Madam Chair.
All right, and we will move to questions and comments on the annual comprehensive financial report and the recommended budget amendments. And it looks like Councilmember Philstep has his hand up. Please go ahead.
Thanks very much, folks. I got a couple of, I just want to ask you a couple of weenie questions here, but let me ask a macro one first. So on the statement of net position, the citywide, right? Does any of that change come from revaluation of existing assets in any way, shape, or form, as opposed to, you know, actual transactions where money moves around? I assume depreciation is a factor, for example.
That's correct. Some of the things that are adjusted at the government-wide level are things like depreciation, long-term liabilities for governmental funds. It's
Right.
like an effort to record things and transactions, taking it from a modified accrual basis to a full accrual basis, which will align both enterprise proprietary activities with governmental activities.
But so that makes sense. As a general, this year or in fact any other year, right? Does any of it come from, we used to value this asset at such and such, but we revalued it this year. We marked it to market this year, and the value that we're keeping track of on the books changed because of that, right? Do we ever do that? Or is everything basically recorded at whatever it was we paid for it originally?
Can I chime in? This is the auditor.
Yeah.
So from accounting purposes, unless it is an investment, there is no re-evaluation.
There's no
So
revaluation.
if you to answer your question to be perfectly accurate, that will be investments are valued at fair market value. So it's evaluated basically on a continuous basis, but especially on June 30th, 2021. A classic example that requires redetermination is if you have a property that when you purchase it, you already expect to sell it. That's the term we call a property held for resale. If that's the case, that will be a consistent re-evaluation. However, for accounting purposes, those kind of assets cannot be marked up. You can only mark it down. So you can only mark it down. In other words, you cannot like, oh, this year I'm losing money. I don't make a profit. So let's look at this piece of asset, get a valuation, hopefully it's higher, and then you recognize the money and you make a profit during this year. That doesn't work in the accounting world. So that will be like a pretty classic case of a re-evaluation of assets. But other than that, I don't see a situation that for this year that we have seen as an auditor that leads to like an asset re-evaluation. And in other words, like if if you receive a donated assets, that will be evaluated at the date of the donation, and that is your book value, and that's about it. And you cannot mark it up. You can mark it down, but you cannot mark it up. But I'm just kidding. You cannot mark down even the donation. So you cannot manipulate the financial statement. That's the intent of the accounting, is avoiding discount transactions.
Okay. The reason I'm curious is every year Dave Price in the Post runs an article on how much money the city made last year when we issued the CAFR. Now, I've never really been able to follow it. I've tried a few times. I've never been able to replicate what he's done. Right? So, I'm just curious if that was part of it. Apparently not. Okay, let me ask you a couple of weenie questions if I can. On page 39 of the, I guess it's the ACFR now, not the CAFR.
ACFR.
That is correct.
That's right.
So if we go to actuals on page 39, which is the statement of revenues, expenditures, and changes in the general fund. If we go to the actuals on a budgetary basis and we go way down to other financing sources and uses, and there's a number transfers in, which is 21.154 million. Is that the equity transfer from utilities?
In large part. It's not the only transfer, but
but that's most of it. I think we lost Kylie.
Yeah, Miss Nose, we've lost you. Miss Paras.
Yes, I believe it's majority of that transfer is the equity transfer. Yes.
Okay, good. And I assume that includes the gas transfer, which is at risk over the green litigation.
Correct.
And that's for 4 million of that is the gas transfer, is the green is at risk. Okay. Okay, cool.
Yes.
And so, okay, thanks, that's helpful. And then on this column, where do we find the ARPA $6.9 million?
I believe that is in,
Did you mention opera?
yes.
Yeah.
The opera funding for this year for the city, it is considered an earned revenue because the money has been received towards the end of the year.
Yep.
And as of June 30th, not right now, but as of June 30th, 2021, the financial statement is considered, the city elected not to recognize those revenue yet because there is a 3-year period to recognize those revenue. So in other words, as of June 30th, 2021, it is considered an earned revenue. And if you flip to page 37, page 35, under general fund, liabilities, there's a balance unearned revenue, $9.4 million. Within that, majority of the balance compared to prior year is the significant increase from prior year. That's the unearned revenues that has been.
So that,
But you are very precise on
9.4.
6.9. I only remember 7. No point. Roughly about $7 million.
so
And in response to your question about the transfers, you might want to look at page 67 of the effort. That provides a little bit further breakdown. It did not specify like for what purposes, but you can see from which fund
Right.
general fund is receiving transfers from
got it.
at the top of it. So that's the breakdown of the 28. That's the 394, 13.6, 6.8, and you're right. A lot of them is from electric and gas tax.
Okay, but so if I understand what you just said, if I go back on page 39 for the actuals for 2021, there's a total revenue in the general fund here of 188.183. So are you saying that that does not include the ARPA money?
That's correct.
Okay.
That's correct. Nothing has been recognized as of right now. So it's a balance sheet entry, cash, a liability, offset by a liability called unearned revenue. So it's not earned yet.
It's a balance sheet transaction. Okay. So
For now, because the
next-
council,
right.
correct, because the council, remember, didn't spend the money
Yeah.
and fill the revenue gap that this is intended to fill per
Got it.
the state legislation until the FY 2022 cycle.
Okay, understand. Okay, so then in that case, a year from now, when we're all back here, hopefully not on Zoom, but we're all back together again, going over the ACFR for next year, the 6.9 will be in there somewhere. Where will it be?
It will be in,
Revenue from other intergovernmental.
Intergovernmental, it'll go in there?
yes.
Super. Okay,
So-
all right, thank you very much.
Vice Mayor Burt?
Okay, thanks. Just a couple of things. One was that under the adjustments in, I think it was the capital, let me, I can find it, but there was 7.1 million adjustment upward on public works, if I recall correctly. And could you just give a more of an explanation on if first, if I'm understanding that correctly, and second, more explanation on that, what that went to?
While staff is looking, I think it has to do with the error that was corrected.
That is
Unassigned to Public Works. Yeah, go ahead.
That is correct. This is due to the continuous cleanup that we did for the CIP. So there are various expenditures in prior years that were recognized as a CIP, and then this fiscal year 2021, we made an adjustment to the Public Works considered as,
Okay.
writing the CIP.
Good, thanks. And then second, I saw that the airport had, I think it was a 1.1 increase in that in their net. I don't know if it,
That is correct.
yeah. So I'm just interested in learning more about what kind of trends we're seeing and projections. And I don't have to see it tonight. I don't know if there's a summary that maybe went out last year that I just am not aware of, or if there's just follow-up information to begin to understand where we are on that. And I think the council would be interested too. It's in a positive direction. And then as we get into budgets in the future, not necessarily this coming one, but what are possible uses for those funds, given that it's an enterprise fund, but are there other productive ways that we might be able to use ongoing surpluses?
Just to clarify that airport fund, yes, that's correct. There's a 1.1 million increase, but please note that there is a 6.7 million increase or change in net position this year. This is primarily due to the federal grants. So we receive a federal grants recorded as a revenue. However, the construction related to that is considered as an asset. So meaning, there is a timing difference. So that's why it's resulted. But, every year that would be depreciated for so many years, that capital asset that we recognize.
Okay, thanks. And then lastly, Councilmember Philseth was talking about kind of how this gets reported by one of our local papers in ways that we probably don't think is an accurate way to characterize what's going on in the in what is now the Accrual, right? Accrual?
It'll always be fracas to me.
Yeah. So I just wanted to ask about, this is presented in all the proper terms, but is not necessarily in a summary way for a resident who wants to read one paragraph or two paragraphs on the subject can understand what's going on. And I wonder whether we should be having some form of a cover, maybe when it goes to the council or whatever, that really is intended for public and even the press consumption. They can always choose to characterize things as they wish, but to get a better characterization out there for everybody to understand and for us to refer to might be useful. I don't know what my colleagues think about that. And that's it for my questions. Thanks.
Okay, thanks so much. I also have a few weedy questions. I feel like I find something new every year in these. And as always, I'm going to end with the statistical section because I think there are some interesting trends there we should all be aware of going forwards. I think it's possible that slide 9, if you could put that back up. I don't know if I'm also looking at packet page 62. Just wait a moment. So this is, I am always very interested in the information when we have it across 8 or 10 years. I feel like we get better insights into what's changing than we do when we're looking like sort of year over year. So it was kind of interesting to look at sales tax. I mean, really from FY 2015 to, to 2021 and even 22, quite similar with a big peak in 2019. And of course, the transient occupancy tax also peaked in 2019. Anyway, I think it's worth reflecting on these as a committee, as a community, and I know staff pays attention to this, but I think looking at those trends over time will really help us. Yeah, this is a lot of blue and gray. Maybe we could use more colors in the palette next time. I was like counting to look at them. Yeah, so if you look at like 2017-18 actuals, there's a fair amount of distribution in terms of our largest segments of revenue. And we have a lot less even distribution by the time we get to this year. So these are just things for us to be attentive to going forward. Thanks. One of the other things I noticed in attachment B is the lower than anticipated gas tax revenues. So I'm sure staff is thinking about that going forward. We've been using that, to fund street maintenance and, as people use less gas, either because they're switching hopefully to electric vehicles or riding their bike. and there's less, potential commuting and other driving around, we're not going to be able to rely on that source going forward quite the same way. ESR, I'm sure we'll talk about next time. And now one weedy question, and apologies if I asked this last year. I'm on page 132 of the actual ACFR, and it looks like we have a non-major governmental fund, which is assets donated from Mr. and Mrs. Fred Irely. Do we have $2.5 million sitting in a fund, and what should we be using it for? Was it donated for a particular purpose?
I'll let Christine and Roslyn find the page. The Irely Fund, I can at least provide a high level overview on, which is a trust fund.
What page are you on?
I'm on 132
32.
in the actual
In the
document,
actual document.
not in the packet. I don't know where it is in the packet.
Packet page 226.
Oh, there it is. Yep. Okay. Ireland Family Permanent Fund. Okay. Thank you.
And what the Irely Trust Fund has been set aside for is actually employee recognition for utilities employees specifically.
Oh, interesting.
So the utilities department uses these funds, or rather the earnings from the trust, from the principal, to help fund typically things that we wouldn't fund as a government agency for employee recognition for their staff.
So like $40,000 a year.
About.
And all right, so then that's a good question for utilities. Make sure that they're spending it and implementing the wishes of the donor.
They
Great.
are religiously.
Okay, good to know. Learn something every day. If I learned that last time, I definitely had forgotten it. Okay, now I'm in the statistical section, and again, I'm using the actual document. Apologies, not the packet pages.
So did I learn something, by the way. Fred was my next door neighbor years ago.
Oh,
Yeah.
well, how nice. Well, we certainly
I did
appreciate
not know this. So yes.
all these sorts of donations. You can write a thank you note to the family. Okay, I'm on page 154 of the actual document. Really appreciate seeing this is the property tax rates with the overlapping governments. This information is actually usually pretty hard to back out of a property tax bill itself because our assessor doesn't add them all up. But it's really interesting to see, over time from 2012 to 2021, our library bond dollars in terms of what the rate has gone down. And then we did have a big surge in 2021, but it comes from the school district and from the community college bonds that were passed. So I really appreciate seeing that. It's helpful to us as we think about taxes going forward, to think about them not just in the context of what the city has, but what property owners are paying in total. So wanted to draw everybody's attention to that. 2 pages later on 156, I was pretty stunned to see how significantly property has turned over. Stanford University is the only one in this of the top 10 from 9 years ago who still is in our top 10. That's a pretty high rate of change. Obviously, some of these are probably sales, et cetera, but I thought that was interesting. And then I was also looking page 164. School enrollment peaked in 2015. And it's gone down every year since. So I know Councilmember Phil says we're really in the business of education, but that's a pretty significant drop, and it's consistent with what other school districts are seeing, and frankly in the state. So I always find the statistics section super helpful, and I appreciate the effort that goes into it. And I encourage our committee and whoever's on the committee next year to use this data and information as we think about what taxes we might want to ask voters to approve. Okay, Councilmember Philseth, you're ready for another turn.
I do. I had a couple more questions, but you just raised an interesting one. If you go look at the chart you were just looking at, under changes in fund balance of government funds, property tax for 2021 looks like 60.9 million.
Sorry, now which page are you on?
I'm on page 148.
Okay.
So revenue is property tax. 2021, 60.9 million. Why does that not match 2021 property tax on page 39 of 56.57 million?
Hopefully you're not asking me.
And some of the other numbers match, but not that one.
If I may, my name is Terry Narayan. I'm the manager of Treasury Debt and Investments.
Hey.
That one includes about $4 million for the GO bond. So when you're looking at 56, that's just the general fund property tax. When you're looking at that chart, the 4 million we have in the GO bond is for the libraries.
Of course,
we collect about 4 million from that.
that makes sense. That makes sense. Okay, thank you. That explains it. And that's why that one's different and some of the other ones, they actually do match. Okay, I actually had one more question I wanted to ask on page 39, which is the 13.6 million in transfers out. I assume that's transfer to infrastructure. Am I correct in that?
Majority of it, yes.
Most of it. Okay. All right. Thanks. That was my question.
Vice Mayor Burt, other questions, thoughts?
Just one small one, following up on your question on the gas tax. Do we have a sense of how much of that change was due to the let's see, 4 months that were where travel was impacted from March through June from the pandemic versus other ongoing factors?
I don't know if staff does, but I can say I definitely don't think we have that level of granularity into it. The state really kind of dictates and provides estimates to government agencies based on their receipts and what's coming in. So it's not disaggregated at a level that we're able to get to that.
And do we just get it annually or do we get it quarterly?
I actually don't know the payment schedule of it.
You receive it monthly.
Monthly.
Sorry,
Monthly,
I'm sorry, I still missed that.
monthly.
Oh.
Monthly.
Monthly.
Oh, well, then we should be able to look at whether there was a drop off in March. That as a follow up, that would be great to know because it would help inform what we should expect going forward. Okay, thanks. That's it.
Councilmember Philseth, you still have your hand raised. Are you ready to make a motion?
Move staff recommendation.
Excellent. I will second. Do you have any comments?
Another boring report. Well done.
Okay.
Well done.
I'm not going to call this one boring, but I will just emphasize what I said in the prior item is this is, the breadth of what we offer in this city is really on display when we go through this in this detail. And I know it's something I'm grateful for as a person who lives here and gets to enjoy all of these assets and services, including the new bike bridge. Okay, Vice Mayor Burt, would you care to speak to the motion?
I'm good, thanks.
All right, we'll
Looking
go ahead.
forward to how it feeds into next week's discussions.
All right, well, let's not get too far ahead of ourselves. All right, let's go ahead and vote. Vice Mayor Burt?
Yes.
I will vote yes. Councilmember Philseth?
Yes.
All right, that passes unanimously. And again, thanks to our staff, Ms. Fernando in particular, for joining us this evening and for all the preparation that went into it. And now we will move on to item 3, which is Finance Committee Referrals Update. Those of you following along at home, it's all the way at the end of the packet, page 267.
Thank you very much, Chair Cormack. We don't have a PowerPoint presentation, being that it's not too long of a staff report. However, we do have 9 council referrals that were referred to staff during the council retreat and the annual budget process. Out of those 9 referrals, staff has closed 3 of them and 5 are still pending. So within the 5, there is the evaluation of the printing and mailing services. That is in process, and staff expects to post a request for proposals by the end of the calendar year. Another pending one is the ballot measure item that we are working on continuously with Finance Committee and City Council. And another pending one is a report on JMZ after it opens and what it would look like to eliminate the general fund subsidy of the Junior Museum and Zoo. So with the JMZ opening in the past few weeks, staff is expecting to submit a progress report to the Finance Committee in the next new year. So with that, I turn it back to you for any questions, comments, or public comment on this item.
Thank you, Ms. Paras. We will turn now to public comment and see if any of our attendees would like to make a public comment on our referrals. Seeing none, I don't even think I need the clerk at this point to confirm, but she can interrupt if I made an error. We will go ahead and close public comment on this item. And I will note before I turn to my colleagues that in addition to things that staff closed, we managed to recommend 2 of things be moved to policy and services. So that's one way, I guess, to get them off our list. Councilmember Filsa, Vice Mayor Burt, any comments or questions on the status of referrals?
Thanks for the, it
good.
looks straightforward.
Okay, and sorry, Vice Mayor Burt, I didn't catch yours.
Said I'm good with it. It's great.
Okay, great. I do appreciate staff's diligence on this. We did work through some, what do they call them? Aged receivables, I think, at the beginning of the year. Yeah, so that's great. And we will be reconvening next week, correct?
That is
For
correct.
our last meeting. All right, let's see. How'd we do on time? Well, pretty good. Anybody who wants to watch the Warriors game, I think you may have just barely missed tip-off. And with that, we're adjourned. Good night.
Good night,
Right.
everyone.